The actual economic crash, we're in the first stages of it. But it's moving very slowly. And to report on it actually accurately and to try to get ahead of it the way it's happening, you have to be very flexible. And you have to keep your eye right on the world situation. And you have to do a lot of continuous research. Now, because the situation is fluid. It's happening in real time, the crash. And so, in order to report on it properly, you have to be fluid and put a lot of research in. And you can see trends developing. Now, Peter Schiff, I've got an excerpt from him here. And I was listening to him this morning, and he made an excellent point about Janet Yellen. There's a certain amount of animosity here. There has to be. The president that's in there right now, I don't think that he's loved by the Federal Reserve. I think that the Federal Reserve, they showed a lot of love toward Obama. And the thing was they kept the markets up every time. And Peter Schiff, he shows this point. We are actually coming around to a market correction. I'm going to read to you a little bit. Now, this is an analyst, a strategist. This report is coming from the mainstream media. You can't get any more mainstream than where it's coming from. It says investors should be prepared for a nasty market correction in 2 months. See, they're actually giving you the time even. As central banks appear set to stick with low interest rates for longer than expected, a former prominent Credit Suisse research head told CNBC on Monday. I think earnings are okay. I think the economy is okay, but I think interest rates are going to end up going up a little bit faster than people think, he said. And that will cause a market correction, said Giles Keating, chairman of the Werthenstein Institute. While Keating stressed that this does not necessarily mean the end of Europe's bull market, he did forecast a nasty correction, and they put it in quotations, a nasty correction in approximately 8 weeks' time. The dollar has slumped to its lowest level against the euro in more than 2.5 years on Wednesday as doubts about another Federal Reserve rate hike increased. St. Louis Federal Reserve President James Bullard said he would be opposed to further U.S. interest rate increases and warned future hikes could hamper the central bank's 2% inflation target. Markets News International reported on Wednesday. Expect for another Fed rate hike in December, or around 48%, according to the CME Group. Meanwhile, the European Central Bank is widely expected to scale back its quantitative easing program in 2017. So that's going to cause tightening too, a massive tightening. That's probably as big a tightening as the United States when they cut their quantitative easing program back. They're going to call a halt to their economic stimulus program. Can we all say recession? You know, this guy, he says a crash is 2 years away, according to him, but I think it's a lot sooner. I think that this whole thing that he's talking about in 8 weeks' time, he says approximately 8 weeks' time, he says a 10%. I think it's going to be more like 25%. And I think that the Federal Reserve is going to stick to their guns, which could exacerbate this situation. Now, I want you to listen real quick to what Peter Schiff has to say.
Disease is just taking the rest of the market a little longer before it's weighed down. And here is the risk, and I'm talking about this, and very few people are, is that what is Yellen's tolerance for a weakness in the stock market? Because under Barack Obama, you know, once the market was like a 5% correction, I mean, even before it got to 10%, right? The Fed was out there, hey, we might do more QE. We're not going to raise rates. I mean, the Fed was doing everything to throw the market a lifeline if it looked like it was going down, right? But will they show the same amount of love to Donald Trump? I don't think so. I mean, I think that Yellen put is still there at some point, but I think the strike price is a lot lower. I mean, the Fed might be willing to allow a 20% decline before it comes to the rescue. Because then, if they let the market go down 20%, that's a bear market. And that's Donald Trump's bear market. He's going to own that bear market. So the Fed might be willing to allow a bear market on Trump's watch that Trump is now responsible for, because now it proves that he's a bad president, that he screwed things up, especially if they can get some tax cut in that they can blame it on, or they can try to blame it on the deregulation that he claims has been going on. But then if the Fed has to rescue the market, if the Fed has to save the economy from the Trump bear market when the market is already down 20%, and then they have to do QE4, and then they have to cut rates, maybe it takes the Fed off the hook. See, the Fed can say, look, our policies worked, just that Donald Trump screwed it all up, and so now we got to do it all over again. But
I would recommend listening. I'd recommend people listen to what Peter Schiff has to say. He has a lot of really good information. He's able to hammer a point home really well. So at any rate, what's going on with the Fed is they're going to hang in there tight. They're going to hang diamonds, and they're going to exacerbate this crash that's coming. I'm not really going to call it a crash. I'm going to call it a correction. But it's going to be a rather steep correction. This is all going to be deflationary. Now, what effect is this going to have on gold and silver? I know it's probably going to have a negative effect on oil, and the dollar's probably going to go up. But we actually might face a very unusual situation here where the dollar actually goes up and gold goes up simultaneously. And if gold goes up, of course, it'll drag silver up. I'm expecting that the advance is going to be gold first and silver to follow, lagging behind. That's what I'm expecting. I'm kind of expecting that this deflation is not going to act like a normal deflation. It's the fear factor that's going to drive gold up. When this market crisis comes, and I'm really myself, I'm kind of expecting about a 25%. But the Fed will react in the end. They're going to react, and if you listen to what Peter Schiff said, he said that the Fed will react. But they're going to react at the point where they want to look like the heroes. But it's that reaction that's going to turn everything around. That's going to turn everything around. And the reason why that reaction is going to be them going back to quantitative easing. When Europe is planning on tightening. So this is a shift in the world situation. What do you think that's going to do to the dollar? You know? But then we have this other circumstance that's coming out of nowhere that I'm watching very carefully. And this is the surge in the cryptocurrencies. And this is why I say that if you're going to follow the crash of the world's economy, you have to be very flexible and watch the situation. And the situation is that the cryptocurrencies are on a tear. It's crazy what's happening with the cryptos. And that's because they can't control the cryptos. They can control gold and silver, and gold and silver, if they couldn't control gold and silver would be seeing what the cryptos are seeing right now already. Maybe worse than the cryptos. If they didn't control gold and silver. But they've made people so frightened of gold and silver, and they keep smashing it. They just smashed it a couple days ago again. And this smash creates fear in people. But if people get really frightened and really scared, like they would if a market correction comes along, they'll go to gold and silver anyway, and gold and silver price will go up whether they smash it or not. And they'll lose control. And the reason why is because people will be buying the physical. And if they try to smash the price then, they're gonna lose that game eventually. If there's too many people rushing in to gold and silver as a safe haven asset. They'll lose the game then. Right now, as long as they can maintain the fear, they're actually making some people who have been stackers for a long time are getting so fed up that they're actually throwing in the towel. And they're selling some of their stash into the market. And this is really helping. It helps. Every time that happens, it helps. Feed the market. They need to feed the market. Otherwise, the whole thing's going to run dry on them, and they're going to lose this game. And so it's a pity when somebody does that. When somebody gives them anything to help the bankers, you know, that's a pity. At any rate, so this is the situation we got going on right now. It's a very fluid situation, and Bitcoin and all these cryptocurrencies are going up to the moon. Now, the bankers are getting desperate. They're going to want to try to control Bitcoin. And the best way for them to control that, control Bitcoin, is to try to make it into an ETF. You know, this would be great for them. Then they could start to set the price with a paper market, not real Bitcoin, but just on paper. They could start to control the price. At first, they would swing it up, and then a huge swing upwards, and then a huge swing down, crash the market. Just like they manipulate gold and silver. They would just love that. Oh, they would just love to have control over the cryptos. You know? What a bunch of I can't use words to describe how criminal they are. You know? But anyway, this is what we got to deal with. And so, I mean, it just sickened me the other day when they smashed silver down again, and the cryptos. I just love to see them going up like this, because eventually they're going to take out. I believe that they're going to take out the fiat currencies. The cryptos are. It used to be at one time that I thought that it was going to be the gold and silver that were going to take out the fiat. But now I'm starting to think it's the cryptocurrencies that's going to do that job, because they're going to be able to control gold and silver right to the bitter end until the market breaks. And the market's going to break if they run out of silver. They're not going to run out of gold. They won't run out of gold. But they could quite literally. We can't see behind closed doors. We don't know how much they got left. They might be just running on vapors. There might be nothing, almost nothing there left that they're supplying the market with. We can't see that. And just because a guy will go into AppMex or someplace like that and see hundreds of boxes of monster boxes, he might go in there and he's all impressed. He says, "I just come back from AppMex and they got like 100 monster boxes in there." You know, and that's proof to me that that there's all kinds of silver. Do you realize that 100 monster boxes could dry up in one day? You go in there one day and they're all there, laying on the floor, and the next day you go in, there's not one left. You know? People don't think that way. But that's the truth behind the situation. That can all dry up so fast that it would make your eyes spin in your head. You know? So, listen, thank you guys for listening. Like and subscribe, and hey, we'll catch you in the next article. Bye.